It's been 23 years, 4 months and 8 days. No, I'm kidding. It's day 49, 4 days on, and we are going to close down this Euro New Zealand dollar trade. Quite a loss in the end, almost $200, so our biggest loss. Let's shut it down now and be done with it. $197.53 loss from it. We got crushed by this day of panic right here, 240 pips. That put into us. The trade as a whole went 1.75% negative. So it all finishes $464.97 down. Started at just over $9,119. Pretty weak, pretty poor. And we were always on the back foot after these 3 starting trades, 150 apiece. Made some of those back in the middle, gave us hope. Not terrible wins there. But then right at the end, it comes back against us, in particular this Euro New Zealand dollar trade. And no good at all. Of the 10 trades, only 4 winners against 6 losers. Just going to take a look at our losing trades and see if there's anything we could have done to help us out, try and avoid them. And we took 2 trades on the Australian dollar, New Zealand dollar. We're just looking at this one, the losing trade. One thing you can do is try and add risk to your trade if it continues to go further against you. So you might not want to do this every period it stays in the overbought territory. But if you want to do it every second period, you can see how that turned out. So on this Australian dollar, New Zealand dollar trade, for example, we got in here when it went into the overbought territory. We sold it off one more day in the overbought territory the next day. You could say that's not enough. You want to wait for it to re-enter over here. And you could either put the same amount of risk on or you could double down on the risk. In this instance, it would be a loss there of about 20 pips. But then it re-enters again right up at the top here. And on one of these candles, potential to make about 60 pips of that back. Again, if you were doubling the risk each time, so you said that this is 1 times risk, up here is 2 times risk, and up here is 4 times risk, that would have made this trade profitable in the end, using that martingale style approach of doubling down. Looks like that style might have helped on the Australian dollar, US dollar as well. We entered it here, so if you didn't immediately carry on there, but when it re-entered the territory up here, I mean, it's flat as it is. This was the trade where we exited right at the start of the day. The exit technically should have been here. It was an error, but if we pretend to be an idealist for a second and say that we didn't have that error with the daylight savings time, then that would have been 80 pips there. That's what it's like on a pure back test. You can only rely on yourself to make the correct entry. And then you've also got a re-entry here as well for a 3rd time, and that's over 100 pips. So again, if you were doubling your risk each of those times, this one would be close, only about 10 pips or so. The 1 times risk, but the 2 times up here and the 3 up here, really impressive. Euro Japanese yen, you could have doubled down here, and since we exited there, it would have got you a bit back on that trade. I think it still overall would have been a loser because you're only getting about 20 pips back compared to the 60, 70 that were lost. But it still does make it a touch better. Pound Swissy, there wasn't really a chance to double down on this one, so this trade is as it was. It's about a $10 loss total. And the Euro New Zealand dollar trade that we just closed down, you could have doubled down up here on the 2nd period, and that would have been a small loss still. So we closed it off there, so you'd be looking at probably 10 or 15 pip loss. Almost forgot our New Zealand dollar, Canadian dollar trade as well. This was a baddie. And again, you could have doubled down up here actually. This would have been 2 more periods in the overbought territory. And a small loss for you on that one. So of our 6 losers, we would have had 2 trades there where you would have lost a bit more. Not a huge amount, but a bit more. 1 trade where it wouldn't have made a difference, the pound Swissy. 1 pair that it would have had a small positive impact on, the euro yen. And 2 currency pairs where it would have had a really nice impact on. So for these particular trades, I think that would have got you into profit. But that's not to say it's going to work all the time. Trends can keep on going and going. You get stuck in an awkward move and you keep doubling down and doubling down. You might even run out of margin. But it's some food for thought on how you might try and improve the strategy, as it did fail. That is the strategy though, done and complete. Results nailed in, cemented into the ground. You'll need to change something on it to make it work, as is not always getting there. I did have a look at some stocks as well to see if that was feasible. That looked worse. I went in on, I think it was Disney, where it was oversold and oversold and oversold. And the actual stock value can go like 10-15% before it changes. On Forex, it's probably not going to go that far. Maybe for Turkey, but for the major and minor currency pairs, they're relatively stable. We'll have a look at those trades of ours though now from this strategy in the journal. Larry Connor's RSI-2 strategy, the final journal. Not looking all that healthy. Plenty of red to be seen. As we know, 10 trades, 49 days, $464.97 lost. So that is averaging almost a $10 loss every trading day. That can add up across years and decades. It started really bad for us. Those 3 trades put the boots in, and we know possibly the Australian dollar, US dollar could have turned out better, but it didn't, and you've got to live with the errors. So these trades didn't do us any favors. Then we got a glimpse of what we were after. These quick return trades. We were only in this US dollar yen for 2 days, Euro caddy for 1 day, Aussie dollar, New Zealand dollar down here 1 day, $90 from that one. And if you were up against these kind of losses, the $76, the $8, then that's kind of fine, but you're not always up against those. You've got these 150 ones up here, and we didn't actually get a winning trade above $100. Close a couple times, but not there. They gave us hope, these wins, though. They did, allowing us to see what the strategy was about, how we could make money from it. But then right at the end, we get smashed in the face, Euro New Zealand dollar. Biggest loss of the strategy, negative $194.63. Most of that loss was in 1 day over the Omicron panic, but 1 day is 1 day. That's what happens when you have no stop loss. And so we do finish on $8,654.25 from our starting balance of $9,119.22. That is the journal. Learn from it, build from it. Let's give our final thoughts on the strategy as a whole. Final thoughts, you are going to need patience with this one. We saw for ourselves getting near enough 10 trades in 10 weeks, so you're checking those charts every day on the daily time frame, and you're only going to be getting 1 trade on average each week. A second reason of why you're going to need patience is that when those trades do eventually come along, you might find you start the strategy by getting 3 trades that all go against you, all losers. And a third factor is that you'll need the patience to alter and amend the strategy so that it can actually be profitable, because based on our results, the strategy as is was not profitable. In terms of the RSI, you can only extend the overbought oversold levels so much. Larry liked them at 90.10. We pushed that to 95.5. If you want to go up to 99.1 to try and improve consistency, it's an option, but at that point you might be cutting off a few of your winning trades too. One option is that you could say that you need the RSI to have been in the overbought or oversold region for multiple days before you consider your entry. Alternatively, the amount of periods input can be raised. You can't call it the RSI-2 strategy if you do that, but extend out if you like anyway. The default for the indicator is 14 periods, although with levels at 95.5, you basically won't get signals using as many periods as 14. It is a balancing act with the levels and period inputs. Depending on your platform, there may be an infinite amount of options for you to try out. We saw a way to potentially improve on the money management aspect of the strategy as well. That was saying that for every 2 periods that the asset remained overbought or oversold after we entered the trade, we could add that same amount of risk onto the trade, or go martingale with it and double down on the risk volume each time. Doing this as every period that it remained overbought or oversold instead of every other period or every 3 periods, that would be quite risky, I'd say. You can of course add an ultimate stop loss to the strategy as well. You'll need to backtest whether that does work out better. Larry found that it didn't. You will inevitably end up with trades where your stop loss gets triggered right before that big reversal snap comes, which would have meant you saved money waiting for it to recross the 5 period moving average compared to as with the stop loss. However, it might well just save you from the ultimate trend, which is what you're really trying to avoid with this strategy. Any type of major trend, whether you add risk to the trade or not, the trend is going to keep on kicking you until eventually you are margin called. So there we go, not profitable on the RSI-2, but plenty of ways to try and change it to make it work. If you are someone dedicated to reversal strategies, that is. If that does sound like you, there is more information in the video description with a couple links. And remember, this strategy and all of our strategies, unless specified otherwise, they are traded with funny money. Demo, false, not real. And in this strategy, you can see why. Thank you for watching. This is Project Trade. I am Adam Smith's final descendant, and there will be more.